Look, everyone is sitting around waiting for the Federal Reserve to cut interest rates, and I need to tell you why that's not happening anytime soon, and more importantly, why the reasons you're hearing from Jerome Powell and the mainstream financial media are complete garbage. Wall Street has been pricing in rate cuts for months now. Every time there's a slightly weaker economic data point, the algorithms start buying because the traders, I think, oh, the Fed is going to have to ease, they're going to have to cut rates, and that's going to be great for stocks and bonds. And I'm watching this thinking, how many times do these people need to be proven wrong before they understand what's actually going on here? The Fed keeps saying rates are going to stay higher for longer, and the market keeps not believing them and then acting shocked when the cuts don't materialize. It's insanity. Dollar and hurting American consumers. And if the Fed was actually serious about fighting inflation, they would need to keep rates high or even raise them further until they actually broke the back of inflation the way Paul Volcker did in the early 1980s. But on the other hand, you have an economy that's completely addicted to cheap money. You have a government that's borrowing $2 trillion a year and needs low interest rates to service that debt. Here's what's really happening, and nobody wants to talk about this. The Federal Reserve cannot cut interest rates in any meaningful way because inflation is not under control. I don't care what the official CPI numbers say. I don't care that Powell gets up there and talks about the progress they've made on inflation. The reality is that inflation is still running hot. And more importantly, the inflationary pressures that are baked into the system because of dollar and hurting American consumers. And if the Fed was actually serious about fighting inflation, they would need to keep rates high or even raise them further until they actually broke the back of inflation the way Paul Volcker did in the early 1980s. But on the other hand, you have an economy that's completely addicted to cheap money. You have a government that's borrowing $2 trillion a year and needs low interest rates to service that debt. So the Fed is stuck. They can't cut rates without reigniting inflation. That's already problematic, but they can't keep rates high without crashing the economy and the financial markets and causing a debt crisis. This is the corner they've painted themselves into through years of intervention and manipulation and refusal to let markets function properly. And now Powell is up there trying to thread this needle, trying to convince everyone that they can, without the interest expense consuming the entire federal budget. You have a stock market that's valued based on the assumption of low rates continuing forever. You have a commercial real estate sector that is already in crisis and would completely implode if rates stayed high. You have zombie companies that are only surviving because they can roll over their debt at relatively low rates. And if rates stay elevated, those companies go bankrupt. Somehow, achieve this soft landing where inflation comes down without a recession and they can start cutting rates gradually and everything will be fine. It's a fantasy. There is no soft landing. There never was a soft landing. This ends badly, no matter what they do. The reason rates aren't coming down yet is because the Fed is terrified of repeating the mistakes of the 1970s when they cut rates prematurely and inflation came roaring back. And underneath all the monetary problems, today our economy is built on consumer spending, financed by debt, on a stock market bubble, inflated by Fed policy, on a services sector that doesn't produce real wealth. Look at what's happening with inflation right now. The official numbers say it's coming down, but those numbers are manipulated. They changed how they calculate CPI years ago, specifically to make inflation look lower than it really is. They use hedonic adjustments, and underneath all the monetary problems, today our economy is built on consumer spending, financed by debt, on a stock market bubble, inflated by Fed policy, on a services sector that doesn't produce real wealth. Look at what's happening with inflation right now. The official numbers say it's coming down, but those numbers are manipulated. They changed how they calculate CPI years ago, specifically to make inflation look lower than it really is. They use hedonic adjustments and substitution and all these tricks to understate the real increase in the cost of living. Talk to any real person, any family trying to make ends meet, and ask them if inflation is under control. Ask them about their grocery bills, their insurance premiums, their rent or mortgage payments, their utility bills, their health care costs. Everything is significantly more expensive than it was a few years ago, and wages, for most people, have not kept up. Real wages is still strong because people need places to live. Services inflation is sticky because labor costs are elevated, and companies with pricing power are not going to voluntarily lower their prices. The Fed printed trillions of dollars, and that money is still in the system. It's still circulating. It's still pushing up prices. You can't just make that go away by raising the Fed funds rate a few percentage points. The reality is that the only way to actually defeat inflation is to destroy demand. You have to cause a recession severe enough that people stop spending, that businesses lay off workers, that asset prices crash, that the excess money in the system gets destroyed through defaults and bankruptcies. That's what Volcker did in the early 1980s. He raised rates high enough to cause back-to-back recessions. Unemployment went over 10%, but he broke inflation. Powell doesn't have the stomach for that. The political establishment doesn't have the stomach for that. Wall Street certainly doesn't have the stomach for that. So instead, they're trying to finesse it, trying to get inflation down without causing too much economic pain, and it's not going to work. Here's what I think is actually going to happen, and I've been warning about this for years. The Fed is going to keep rates higher than the market expects for longer than the market expects because they're scared of inflation coming back. But eventually, something is going to break. Some part of the financial system that's over-leveraged and dependent on low rates is going to crack. Maybe it's regional banks like we saw with Silicon Valley Bank. Maybe it's commercial real estate where vacancy rates are soaring and property values are crashing. Maybe it's the corporate debt market where all these BBB-rated companies that are one downgrade away from junk status start defaulting. Maybe it's some derivative position and a major financial institution that blows up. Something is going to break because you cannot sustain an economy built on cheap money when money isn't cheap anymore. And when something breaks, the Fed is going to panic and cut rates and restart QE, and we're going to be right back where we started, except worse, because the debt will be even higher, inflates another bubble, and kicks the can down the road and makes the eventual reckoning even worse. The market is addicted to rate cuts. Wall Street has been conditioned over decades to expect that whenever there's trouble, the Fed will ride to the rescue with lower rates and more liquidity. It's the Greenspan put, the Bernanke put, the Yellen put, now the Powell put. The Fed always blinks. They always choose inflation over deflation, bailouts over bankruptcy, inflates another bubble, and kicks the can down the road and makes the eventual reckoning even worse. The market is addicted to rate cuts. Wall Street has been conditioned over decades to expect that whenever there's trouble, the Fed will ride to the rescue with lower rates and more liquidity. It's the Greenspan put, the Bernanke put, the Yellen put, now the Powell put. The Fed always blinks. They always choose inflation over deflation, bailouts over bankruptcy,
to zero without making inflation much worse. They've lost control. The tools that worked in 2008 and 2020, the massive QE and zero rates and alphabet soup of lending facilities, those tools are off the table now because inflation is too high. If they tried that today, we'd be looking at double-digit inflation almost immediately, and the dollar would collapse. So rates aren't coming down yet. And when they do eventually come down, it's not going to be because inflation is defeated and the economy is healthy and the Fed can normalize policy. It's going to be because something broke and the Fed is forced to choose between a deflationary collapse and an inflationary spiral. And they're going to choose inflation every single time because that's the politically easier path. Politicians can blame inflation on greedy corporations or supply chains or Russia or whatever scapegoat is convenient. But deflation, recession, unemployment, stock market crashes, those get blamed on the people in power, and they won't accept that. You need to understand what this means for your investments and your financial security. First, long-term bonds are a disaster. If you own long-term treasury bonds, you're going to get destroyed. When the Fed eventually cuts rates, it's going to be in a crisis situation, and long-term rates are going to spike because the bond market is going to demand a higher inflation premium. The bond market is going to lose confidence in the Fed's ability to maintain price stability. Foreigners who hold trillions in US treasuries are going to start dumping them. Bond prices are going to crash. And if you're holding long dated bonds, you're going to take massive losses. I've been calling bond certificates of confiscation, and that's exactly what they are. Second, the stock market is priced for perfection. It's priced for the scenario where the Fed cuts rates, inflation stays low, corporate earnings keep growing, and everything works out great. That's not going to happen. When reality sets in, when earnings disappoint because the economy is weaker than people think, when the Fed can't cut rates as much as the market wants, when some crisis forces the Fed's hand, stocks are going to reprice significantly lower. And I'm not talking about a 10% correction. I'm talking about a bear market that could easily take 40, 50, 60% off the major indices in real terms. Third, you need to own gold. Gold is the only asset that makes sense in this environment. The Fed is trapped between inflation and deflation, and either way, gold wins. If they keep rates high and something breaks and we get deflation, gold holds its value as a safe haven while everything else crashes. If they cut rates and restart QE and we get more inflation, gold goes up because it's the only real money that can't be printed. Central banks around the world are buying gold at record levels because they see what's coming. They're diversifying away from the dollar. They're preparing for a world where the dollar is no longer the unquestioned reserve currency. You should be doing the same thing. The narrative that rates are coming down soon is just another delusion that Wall Street and the financial media are selling you to keep you invested in overvalued assets. The reality is that the Fed has no good options. They're trapped in a situation where anything they do is going to cause problems. If they hold rates high, they risk breaking the economy and the financial system. If they cut rates, they risk reigniting inflation and losing credibility and accelerating the dollar's decline as a reserve currency. There is no path that leads to a happy ending here. I've been warning about this for years, and people said I was being too pessimistic, too negative, that I didn't understand how things had changed, that the Fed had learned from past mistakes. But the Fed hasn't learned anything. They're making the same mistakes they always make, just on a bigger scale with more dangerous consequences. And when this all comes crashing down, when the dollar crisis hits, when the debt spiral becomes undeniable, when inflation or deflation or stagflation destroys the purchasing power and wealth of millions of Americans, everyone is going to act surprised and look for someone to blame. And it's going to be the same people who are in denial right now. Protect yourself. Own physical gold and silver. Get your assets diversified internationally. Don't trust the Fed's promises about rate cuts or soft landings or any of their other fairy tales. This is basic Austrian economics. You cannot manipulate markets indefinitely without consequences. You cannot print unlimited money without destroying its value. You cannot borrow your way to prosperity. These are fundamental economic truths, and the fact that our entire financial system is built on denying them doesn't make them any less true. The bill is coming due, and it's going to be paid one way or another, and the people who are prepared are going to be much better off than the people who kept believing in the fantasy.